SushiSwap is a decentralized exchange and liquidity protocol on Ethereum that we can use to swap tokens and lend out our crypto for some yield. It also has cross-chain support, meaning you can use it with a number of different blockchains like Binance Smart Chain, Polygon, Avalanche, way more as well. And we can set these up in just a few minutes and then swap tokens on those blockchains. This doesn't mean we can just swap tokens from one network to another though, and I'll go through that in more detail throughout the video. But we're going to get set up with the MetaMask. Then we're going to learn how to swap tokens, lend tokens out, and stake Sushi tokens for some extra yield as well. Timestamps for every section are in the video description, along with some other helpful videos that you may need, including setting MetaMask up with the various different blockchains. So definitely check out those if you need more help. Okay, so we're going to come over to the Sushi network right now, and we're going to look at the supported networks for starters. So come to enter application. It will take you through, this is what it should look like. Now we can know these supported chains by coming up here and just clicking on the blockchain right here. So we're on Ethereum right now. You can see Polygon, Binance Smart Chain, Avalanche are all supported. The way that you switch between these chains on Sushi is really easy. You just click on the chain and it will swap you over. So for example, if I click on Matic, I go through to my MetaMask wallet, just click on Switch Network. I'm now using the Matic chain with SushiSwap. So the way that we can get all of these different blockchains set up with SushiSwap is setting them up in our MetaMask. So what I'm going to do is leave the actual videos on how to do that in the description. So if you want to know how to set up the Polygon network, Avalanche network, and Binance Smart Chain networks with MetaMask, how to get everything done and sorted, then watch those videos in the description. They are there for you. For this tutorial, I'm just going to stick to SushiSwap and kind of using the different chains. So firstly, what we're going to have to do is just use the swap feature on a blockchain. I'm actually going to go through on the Binance Smart Chain right now. So I'm going to click Binance Smart Chain and then switch network. You can see that that has switched. And now what it's doing is looking at all the tokens that I have in my Binance Smart Chain wallet with MetaMask. So as long as you have tokens in that wallet, then you can swap them. Again, look at those videos in the description if you want to know how to get tokens on, how to set up those blockchains with MetaMask. But very easily, if you have tokens in your wallet, you can swap them. So we're going to swap from. So click on this and it will show you all of the coins that you currently have in your wallet. You can see that I've got some BUSD and I've got some VI tokens, and I also have some BNB coin as well. And then if you can't see one, just come down the list, and obviously swapping, you need to have one of those coins in your wallet. If you can't find it on here though, you can search for it up at the top where it says search name. So let's just type in BNB. And of course I do have BNB there, but it's searching for wrapped BNB. If we come back, you really can't see it, then go to manage token lists. And essentially, if you can't find a token, you might have to turn one of these lists on. If you can't find a token here, it's probably a smaller token that you might not want to trade anyway, because really, if it's not on CoinGecko, Gemini, or Yearn, then you probably won't want to be trading it. So turn these on, and these are the lists that you search with, and these are trusted lists of tokens. So just leave that as it is. Then I'm just going to search for a token to swap into. BUSD is good for me, so I can click on BUSD, and that is going to swap me from BNB tokens into BUSD tokens. So just click the amount, so 0.01 for example, and then it's just going to show you, okay, so if you have BNB, 0.01 BNB will swap into around $5. If you click swap, you can have a preview of the amount that you'll get, the price impact that you have on the pool, and the fees that you have to pay. All you have to do is just go through and click confirm swap. That will take you through to your MetaMask. You'll have to confirm the transaction and pay a fee. On Binance Smart Chain, this will probably be around 5-6 cents, maybe something like that. If you're using the Ethereum network, it's going to be much more expensive as of making this video. If you want to switch, come up here, click Ethereum. As long as you've got MetaMask set up with Ethereum, and again, that video is in the description if you need it, you can see now that it is recognizing that I have some Ethereum, so 0.01 like this, and then I'm going to switch that into 1inch exchange as an example, and it tells me how many of this token that I will actually get. If you've just swapped one token for another, you may find that you can't see it in your wallet and it hasn't disappeared. When you swap the token, there should be a box that comes up that says, do you want to add the token to your wallet? Click add. And then what happens is that you can come over to your MetaMask and it will essentially add that token support on your wallet, and then it will show your balance right there. If you want to do that for another token, like the SUSHI token, just come up here, click this, and it will take you through to add that SUSHI token to your wallet. You can click add token or cancel or whatever, and that will give you the token support, and then you can see your balance. Next, I want to come to adding liquidity onto the platform. So if you have 2 tokens that you hodl and you want to earn some extra passive income on them, you can add liquidity onto SushiSwap and you will earn some of the fees that people pay to swap them. So we can come to the main app page right here, and we have to be on Ethereum. A lot of the other blockchains just don't support adding liquidity, and the liquidity pools are very low anyway. So really it is only for Ethereum, but you might be able to find some liquidity pools on other platforms. So just check what they are per blockchain. Just come to liquidity though, and you'll see that you can earn 0.25% of all the trades and the fees that people pay in that liquidity pool. Now this can really add up if the liquidity pool has a ton of trading. If it has a lot of liquidity, people are trading all the time, then obviously the fees will be higher and you will get 0.25% of the fees. And then obviously depending on how much of the pool that you own, you'll get paid out. So we need 2 tokens to add liquidity onto the platform. I'm on the Ethereum network, so let's put the max in and change this to actually 0.3. And then we'll need a second token to add into the liquidity pool. So come to select token and you can search for many here. Some token pairs have much more liquidity than others. If you have a very small token right here, it's going to be difficult to find a pool if there even is a pool. So you may want to really stick to a very large token. So let's just put wrapped BTC, and this will be a large liquidity pool. And what you can see is that we will have a percentage of the pool. So right now we are putting in 0.03 ETH, and the system will work out how many wrapped Bitcoin that would actually get us. So we have to put both of these tokens into the pool. So you'd need both of these in your wallet first. Then we can see that we have about 0.01% of the pool. So very, very small amount. It's obviously a large liquidity pool. And what will happen is that we will get a share of all the fees that people pay. You'll have to approve WBTC first if you haven't used it before, and then pay another gas fee to put the coins in. So if you're on Ethereum, it's going to cost a ton of money to do this as of right now in gas fees, but that is what it is. When you put 2 tokens into a liquidity pool, a decentralized exchange will give you something called an LP token. And on SushiSwap, it's an SLP, so a SushiSwap liquidity provider token. Essentially what this does is give you a receipt of your ownership of the pool. So if you have 1% of the pool, your receipt or your LP token will essentially say, hey, you are going to get this amount in fees, 1% of the fees earned, and then you can give your LP tokens back and they will give you the ETH and wrapped Bitcoin, in this case, back to your wallet. So the LP tokens are important to get fees, and also, they're a receipt of what you put into the pool in the first place. Staking is quite complex though, and there's something called impermanent loss or divergence loss that you need to be aware of if you're putting tokens into a liquidity pool. I'm not going to go into it in this video. It is quite complex and it can actually take away from the fees that you earn depending on how much divergence loss there actually is. If you want to know more about that, I have a whole section on that in the crypto course. I'll link it in the description if you want to find out more. But adding liquidity can be a way to earn extra fees. And what you get also is the ability to farm your LP tokens. So when you have SLP tokens, you can come and actually put them into a farm and earn extra on top. Let's come to farming SLP tokens then to earn even more yield on top of the yield that you earn from putting your coins into the liquidity pool. So come over to farm right here and you should see all of the farms. Now, I just looked at an Ethereum and wrapped Bitcoin farm. So you can definitely search for that. So WBTC, and you can see all of the different liquidity pools that you can put coins into. If you don't want to use the add liquidity feature that we just used before, just come to one of these pools. You can see some options. You can see the TVL, which is total value locked. Obviously, the more TVL, the bigger the liquidity pool is and the more reliable it is, which is a good thing. We can also see the rewards. So you get paid out extra rewards in SUSHI for staking your LP tokens. And then we can see the APR. So that's the annualized rate that we get. So Let's just go down. This is a very large pool right here, 500 million in liquidity, wrapped Bitcoin and wrapped ETH, a huge pool. You can add liquidity from this screen as well if you haven't done already. And you can actually see that I do have tokens right here. And then what we can do is add that liquidity in. And then when you have your SLP tokens, come over to the right-hand side and click staking. You'll have an amount of SLP tokens, commensurate to how much you put into the pool. And you can just deposit those, and then you earn those extra rewards in SUSHI tokens for staking your LP tokens. Rewards will change depending on the liquidity pool that you have it in. A very large, low-risk liquidity pool will have lower rewards, and then very small tokens will have much higher rewards. This also has something to do with the risk that you're taking, providing liquidity with smaller, highly volatile tokens as well, because divergence loss can be bigger. So again, if you want to know kind of the ins and outs of that, check out the crypto course linked in description. Something else we can do is just very simply stake SUSHI tokens on the platform and get a yield back. This is essentially like investing tokens into the platform and getting some dividends. So the way that we do that is come over to stake. This only works on the Ethereum mainnet version of the application. If up here you have Binance Smart Chain or Avalanche, you're not going to be able to stake these tokens. Only works for the ERC20 tokens on the Ethereum mainnet. As you can see, 0.05% of all of the fees paid on the platform go to this pool. And if you have SUSHI tokens, you can earn, for right now anyway, about 12% yield. So this is a very simple thing. Put SUSHI on, get 12% yield. There's no divergence loss or anything here. You're just staking on the platform. Once you have SUSHI in your account on your Ethereum wallet, come over to stake SUSHI, choose the amount that you want to stake, enter that amount, and then bang, you are earning 12% yield as of right now. If you want to unstake those, come over to unstake, you unstake the amount that you want, and that SUSHI will be put back into your wallet. When you stake SUSHI tokens on the platform, they will give you something called xSUSHI, and this can be used in a couple of different ways. The first one is that you can use it to vote. So essentially you have an ownership of the platform and you can use your amount to vote in various proposals. The second thing you can do is actually use that xSUSHI as collateral to borrow against. So you can put an amount of money in SUSHI tokens, make 12% investing in the platform as of right now anyway. But also, you don't have to lock up the money or the value of your SUSHI tokens. You can get that xSUSHI over to the borrowing part of the application and then borrow something like USDC against the value of it and then go and invest in another token. So we're going to look at borrowing in a second. Let's come to lending first then. This is also very simple. You have a crypto that you put onto the account. Someone borrows that and pays you interest for doing so. No divergence loss. It's very simple money market here. So come over to the lend feature. Again, this may not be on every chain. So if you have Binance or Polygon, just check if they have money markets on those chains. Some don't, some do. But the Ethereum market is by far the biggest and deepest liquidity pool. So again, just choose something that you want to lend out. If you have USDC, if you have wrapped ETH, any token, you can lend it out and earn yield. I'm going to go for USDC right here. And you can see that USDC on the left-hand side, this is the money market. So on the left, this token is the one that you'll be lending out. So that's USDC for all of these. On the right-hand side, this icon is the collateral that people put on account to borrow against. So you're lending to them and they're putting these tokens on account, as an amount of money to say, hey, I'm good for it, just in case, the value falls or whatever, they can't pay it back. So that is the token that is as collateral. And it actually says here as well, this collateral here, it just, gives you the token ticker as well. So as I said, you can put xSUSHI on account as collateral, but we're lending here. So lending USDC, they are putting xSUSHI on account as collateral. Chainlink is the oracle. That's good. It just gives us the price data. This is the APR. And then this is the amount of that liquidity pool that has been borrowed, currently 63%. Come in and click. How much have you lent? None. If you want to lend out, click on deposit here. You're going to have some USDC in your account. This is the Ethereum market, so that will have to be ERC20 USDC. Come and click how much you want to lend. Click approve, then click lend. You'll have to pay gas fees here on Ethereum, pretty high. then you can see really the supply and the APR. So the supply APR is the rate that you'll be getting paid. So if you put USDC on account here, you'll be getting paid 10% rate annually for your lending that out. You can see some other details about the money market pool here. If you want to borrow funds, for example, if you have xSUSHI and you want to, get some liquidity from that, then come to the borrow markets. So again, come up, click borrow. Once more, if you have Binance or Polygon or AVAX, you may not see this option. They may not have markets. What I want to do is put xSUSHI on account and then borrow USDC, so I can go and invest that in Bitcoin or something else that I think is going to do well, over time. So come to the search symbol. We'll put xSUSHI in and we can see those markets that we can use. Now I want to borrow USDC. So that's right here. As you can see, USDC is what we're lending and the collateral that I can use is xSUSHI on the right-hand side. Again, it gives me the ticker and the ticker of the collateral. Oracle is Chainlink. Size of the market right here, it's a big market, so that's fantastic for me. I know that there's a lot of liquidity and I'm not going to get stuck in anything. So click on this. Now we can see from the other side what we have to do. The first thing is we'll have to click on borrow and then we can see essentially the APR that we have to pay, which is quite high. So 17% is the interest we'll have to pay to borrow USDC. We're getting 11% in xSUSHI. So, that works out at maybe 7% that we're having to pay for USDC. If you think that there's a token that's going to go up more than 7% per year and you're paying 7% in interest per year, then that's a net, just a net profit for you essentially. So if the token goes up 20% and you're paying 7% to borrow, then obviously 13% is netted on without giving up your xSUSHI. Now that's something that you're going to have to basically try and work out yourself if it's a good deal for you or not. And obviously borrowing has risks of the token going down, etc. So not financial advice on this one, but we have to add firstly xSUSHI. So come here, put the amount of xSUSHI that you have in your wallet right here, or that you want to use as collateral right here, and then click amount of USDC to borrow. I suggest not borrowing more than about 70%. The loan to value or LTV right here is 75, meaning they will only loan you 75% of the value of your collateral. If you have $100,000 worth of xSUSHI on account, they'll only give you $75,000 worth of USDC. You can choose how much you want to borrow, and it just gives you the other stats of the pool. Approve that, put them in, pay the gas fees, and then you will have that USDC in your account, and you'll have to pay interest on that as well, daily, paying it back a small amount per day. If you want to just repay the whole amount in one go, come to this same page, click repay right here. You will have to repay that USDC from your wallet, and then the xSUSHI, because you're using that as collateral, that will be removed from the money market and then put back into your account, and you can then swap that back for the actual SUSHI token at a later date if you want. If you need to know how to link up your MetaMask with Binance, Polygon, and Avalanche, I'll leave those videos in the description. Also, if you want to know how I trade, invest, and earn passive income on my crypto using these platforms, then the MoneyZG crypto course is linked down there as well. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.